Okay, welcome to the Swing Trading with Cycles channel. It is December 23rd. It's Christmas Eve. So happy holidays, Merry Christmas. Um, and we will run through crude oil, WTI. We'll also look at Brent. Again, as a reminder, WTI and Brent are moving in lockstep in terms of the price action slash cycle count. So looking at one is kind of like looking at the other. That said, they're obviously trading at different levels in absolute terms. So let's look at crude first, and we'll also look at some energy stocks as well. So first off, we talked about this notion that this latest swing low here, to be clear, I'm talking about the one from December 9th. That was an undercut of this low from November 28th. So we're calling this November 28th low our daily cycle low. And again, if you're not familiar with cycles, you definitely want to take a look at the link in the description. Yeah, you want to take a look at the link in the description for that background, and there's some written content, a few videos. It's the core, but that said, it's about the price action, lower lows, lower highs, prices, trend. Price action analysis allows us to analyze those trends. We don't predict the future, we analyze the present with great precision. So this is your low on day 45, and we had a feeble 3-day rally. And so the assumption was, oh God, and I'll add the moving average here just for if it's like, that's your blue line. That's kind of a visual cue. You don't really need it if you're looking at the price action, but you can see we dipped below the 10-day moving average. And just to recap, this was a 30-day cycle. And as I keep mentioning, it's important to understand that we actually topped out on day 10, and then we had this this big decline, and then we recaptured that, and then we double topped on day 30. So even though it seems like it was a right translated cycle, like we theoretically rallied for 30 days and only declined for 15, that's not what really happened, right? What really happened is we had a 10-day rally, and then we had this ugly period that got us back to the same level, and then we lost it all. So not good, not good. So again, the day 30 high is a little bit deceiving. So the idea was this had topped out super early on day 3. And then we had almost basically immediately failed, right? So not only were we going to get a left translated daily cycle, but also a failed one. And then we made this low, this pretty significant swing low so far, December 9th. And this is starting to look like it might be our daily cycle low. And that's why we have this marked as day 10 or day 19. We've been talking about this. It's possible that instead of this being our daily cycle low, it's actually this. And this would be day 54, I think. Yeah, because that's 9 more days. And as I say often, the count is less important than understanding the price action. That's what really drives this. But it's starting to look like this is actually our daily cycle low on day 54. Now, that doesn't mean things are bullish. This thing could still roll over. And this could still be part of a new daily cycle that's going to roll over. We have to kind of continue to watch the price action. But right now, you have to respect the trend for what it is. And we are trending higher on the daily chart. How do I know that? Well, it's very clear. After this low here on day 54, we made this high. So we rallied for 3 days. We pulled back. We made a low. What kind of low is this? That's right. It's a higher low, right? What low is it higher than? It's higher than this one. And now we've gone up and made a higher high. What high is this higher than? This one. And so just to be clear, what we would expect from, what we would need to see from here to think that the uptrend is continuing is, see that we did that. At some point, we're going to get a pullback. We really wanted to hold, 75 at the lowest. I mean, even pulling back all the way there would be a lot. But then do this, then do that, then do that. Now, the real line in the sand is going to be getting back above this high, because that would tell us, okay, this probably wasn't a daily cycle low and this was. So we're still going to kind of remain nimble, but this is certainly good enough for a trade with the right stops. And I'll talk about a trading vehicle that just actually is the price of oil itself. So it's starting to look more like this is day 10, which itself is not super early, right? Day 10 isn't early. It's not late, but it's also not early. And so that's just important. If we're going to get a bearish cycle, it's going to roll over soon. And it's always important to understand the broader context. The S&P 500, the broader market is most likely moving into a weekly cycle low. Definitely take a look at that video if you haven't. Massive sell signal last week with that bearish outside weekly candle. And so you would think that's gonna pull everything down. But again, it's important to read the price action. I mean, technically, if you really want to categorize this is another higher low, right? Like, and that's what you want to see. Price can't go up in a straight line. It's going to have to pull back, but when it pulls back, you want to see that it's holding higher lows. And what does that look like for the weekly chart? Let's take it off log. And so same kind of variability. It's like, wait, was this our weekly cycle low on week 24? Or is it possible that this was our weekly cycle low on week 34, right? The bearish interpretation would be this is our weekly cycle low on week 24. We topped out on week 6, which was a double top, just like the daily cycle that we kind of talked about, and then we've rolled over. Now, what we're going to need to see is a move above the high of this candle, and so that is $82.70. So that becomes a nice near-term like level for you to pay attention to, right? Like we're probably going to see some resistance there. I mean, you can see look at these three wicks. Look at these three candles. These are weekly candles. Look at these wicks, right? It's not a coincidence. It means price pulled back around there, right? So and it's also going to coincide with where the 10-week moving average is. So it's going to be super telling to see what price does when it gets here. Like, are we doing this and then that and that? Or are we trying to set up for this? Maybe a little pullback then, right? We want to be watching so that we can position in the right direction when we get more clarity, because we will get more clarity. But so far, notice just on the really tactical level, this is a candle that marks the low, potentially week 34, or potentially week 10. This next week we had an inside candle that, and again, inside candle means it's not making a higher high or a lower low. It's just consolidating inside the previous range. And we then pulled back. And so we opened as an inside weekly candle again this week. So it was a double inside week. So this week was inside this week, which is inside this week. And now we've broken above that, right? So these are your bullish signals that these are the bullish signals that you can go off of before you have higher time frame confirmation. And so the high for this week was $77.74, and we're now a couple of bucks above that. So that's a good sign. That's a sign that we're gonna at least test this $82, $83 area. The open question will be what happens, how does price react? And so to be clear, in the scenario where this is our weekly cycle low, this is week 2. And again, just like the daily cycle can top out early, the weekly cycle can top out early as well. So we want to be aware of that. And the last thing I want to look at before we look at UCO and move on to some of the energy stocks is the monthly. So I keep talking about this kind of thing. It's super important to understand. A candle is green if it's above its opening price. It's red if it's below its opening price. Our opening price is $80.39. So once we get above $80.39, the monthly candle for December goes green. And that's a really positive signal because it gives you the possibility. Doesn't mean we for sure, but it gives you the possibility that this is a major low, right? Because you can't have a low, you can't have a bottom without a swing low. I'll say that again. You cannot have a bottom without a swing low, because a swing low is literally how an uptrend begins, right? And the higher the time frame, the more important. And so this is setting us up to, if we make a move, so like if you think about the way this this monthly candle is going to close, we've only got like 4-5 trading days left in the month. The high for this candle is 83.32. So assuming we don't get above the high before the end of this month, this sets us up to get above that high in January, which would make December a swing low, right? So something like that, right? Like imagine that candle, right? Like imagine this is your January candle. We cross above the high from December, leave this behind. And now you're talking about a potential long-term bottom after this decline that started in March, month 23. Entirely possible, just be aware of that we could get this swing low and this could still end up just being a lower high, right? So then, like, imagine a February candle like that and a March candle like that in April. I mean, this is like extreme, but just know it doesn't mean like we're 100% out of the woods. There's no such thing. I mean, there are no guarantees in markets or really anything in life for that matter. It's really just a question of probabilities. So once we have this swing low, we're increasing the probability that we have a major low, but we always have to be vigilant for that level. And that's what stops are for, obviously. So going to be very interesting to see how we close out the month, and then this gives you a sense of what we're looking at for January. Also, be aware, because this candle is so doji-like, it's very possible that we'll open as an inside candle in January. So the range for this candle is a high of 83.32 and a low of $70, so $13 range. So that'll be important, and then basically it means that until we break out of that range, we're just consolidating on the monthly chart, essentially. We have this is Christmas Eve. Let's just look at the hourly chart really quickly. So we've had this little, let's just see what that swing low looks like from the hourly level. So that's December 9th. So that's our swing low. So multiple time frame analysis, folks. This is our hourly swing low on December 9th. That is causing that daily swing low, the one that is potentially our daily cycle low. And notice there was a retest of it, right? So we were able to, let's just zoom in, make sure we can all see this, right? So this candle marks the low. You can see that's a low of $70.07. We consolidate a little bit, then we push higher. So the mark to beat is getting above that candle. So the high of this candle is $71.66. Another way of saying that is once we crossed above $71.66, we had an hourly swing low on the board and a potential bottom. So this is the lower time frame version of what I just talked about on the monthly level. But this is how you get in early on a trade, right? Now, notice within the next several hours it failed. And in fact, not only did it fail, it then kind of bear flagged right at that swing low level. Very ominous. And then the bear flag failed, right? Like, just notice that, right? I hope you can see that, right? This is 1 hour, 2 hours, 3 hours, 4 hours, 5 hours of bear flagging, fail. More bear flagging, so you expect a lower low, but then it says no. That is a powerful, like, this catches a lot of people off sides because people are expecting a lower low because we're pressing this low here. Instead, we rocket ship, and then we form a series of higher lows as we need to, right? So like that. And then we started to roll over a little bit. That was a little bit concerning, right? Because then now we start some swing lows, or excuse me, swing highs, right? Like that's a swing high, that's a swing high, that's a swing high. But then we start a little pattern of swing lows again. Here, here, here. This is a warning because that broke below that, but then it became a false breakdown. Those are your lower highs. You can open up a chart and do this yourself. Like, so this is a bit of a bearish rising wedge. So I could see this collapsing, and you could see a world where we retest this level. So that's right around $77 even. And that'll be kind of make or break. But again, that's how you do that multiple time frame analysis to connect the dots between the different time frames. Let's look at UCO really quickly. So full disclosure, none of this is ever financial advice. This is a leveraged ETF, so you want to be careful with something like this. But this thing is like, this is your daily chart. And so this is a very similar chart to the oil chart. It's obviously different prices and different magnitude, right? So we rallied off if we're thinking about the Pico bottom, we rallied 17% to this swing high, then we pulled back, and then we came back and made it a higher high. So we've already rallied about 22.5%. And more importantly, the specific tactical pattern here, look at this candle, from yesterday, Thursday candle, red, it's a bearish outside candle, makes a new high above here, but also makes a new low. That's a really ugly candle that suggests, right, like your expectation in real time. You know, if you understand trend, you're like, oh, no, is this sending us lower? And then are we doing that maybe, right? Like, I mean, this part is obviously a little bit more extrapolate. Like, this is a little bit less obvious that that's going to happen, but you expect maybe a little bit of downside, or at the very least, you open as an inside day, right? Like, that would be Again, this is all about probabilities. A candle like this has a high probability that the next day it opens like this, right? So that's what people would be positioned for. Instead, it opens above the high. Like again, remember this candle closed here. So just to be clear, we closed at 27.56 and then this candle opened at 29.26. Oh, interesting. Wow. Yeah, that's a pretty big move. Or actually, excuse me, that's the low. We closed at 28.27. So again, this catches a lot of people off sides. Now, there's a notion that we will likely fill this gap as well, but just wanted to point this out. This is called a kicking pattern. Again, if you're expecting that you'll be best case scenario somewhere here, it's just hard to stay long here. And so you could see a world where people would be caught kind of chasing. Now, what I'll say is this thing is pulling back in real time. Let's look at the hourly chart on this bad boy. So this thing needs to hold 28.19, or excuse me, 29.19. That would be the gateway to the gap down here. So that is an important level to be aware of. So that's UCO. It's one way to kind of play this trade. Just be careful because it is a leveraged ETF. And so like you can see this thing has been kind of down only. So it's a trading vehicle, nothing more. You don't want to park money in here by any means. Let's look at some of these energy stocks. We'll look at XLE. So XLE has a much weaker chart than oil. Like oil's uptrend, we just looked at it. I mean, that thing is, it's pretty beautiful actually. I mean, look at it, right? Like this is kind of what you would see in a textbook for an uptrend, like higher high, higher low, higher, like, but then you look at XLE and it's like, oh, this is ugly. That said, we do have our low here, right? Boom. We do have our swing low. It's also December 9th, the same day that oil bottomed. But I mean, look at this choppy, disgusting mess. That said, we're green today, and we know that oil is in a strong uptrend, so you would think maybe these continue, but at the same time, these continued to run while oil was weak. So maybe maybe you can see a world where they're not going to move in lockstep. But that would put us at day 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So day 10 of the daily cycle for XLE. And so far, the high has been day 3. So that's an important thing to understand. Because what that sets up, basically, it's an interesting situation, right? It's pretty binary. What it means is we're either going to make a high above this high that was already established. So that's 87.36, right? Like we're either on our way to do that so that we get a new high in this daily cycle, whether it's day 11, 12, whatever day we actually make that high, or we've already made our high for the daily cycle here, and this becomes a bit of something like a ceiling. And so again, we react, we watch price and we react versus trying to predict. So like, you know, this is doing something like this. Like it could do something like that, right? And then lower. So if once we start to see more clues that we're heading in that path, that gives you a stronger sort of short signal. Obviously, there's another world where we're actually going to do something like, you know, maybe we knock on it once and then we blast above, right? The same way we're kind of talking about oil is going to have its day with around 83. We're going to have our date with, call it, you know, 80. What is this candle? Again, 87.36. That's the important level to be aware of. So you wait for clearer signals, and then you can apply your short or long is the way I kind of think about it. That's your daily cycle. And so the weekly is an interesting spot here because we know we topped out on week 18. So we started our weekly cycle decline on week 18. And what was the decline, actually? So we declined about 13% after rallying ballpark 44%. I mean, that would be really healthy if this is the extent of the decline that we get. If you think about it, if oil is making a weekly cycle low, then it is possible that we're seeing a weekly cycle. We have a weekly cycle low for XLE. That this is our weekly cycle low. That said, what a feeble daily cycle bounce we have so far. So it would be odd that that is our weekly cycle low. Like you expect a more furious, vigorous bounce out of a weekly cycle. But all we can do is watch for more price action. So just as we looked at the oil chart, we had made a new high on the weekly chart. We have not done that yet on XLE. So for XLE, it's that 87.36 level that we talked about. That would give us a new high on the weekly chart. But we still need to get we still need to get above this bearish monster, this big monster candle. So that is a high of 91.56. That also gives you some upside, an upside level on any short-term trades, right? That would be around the level where you might think about lightening up, because at the very least we'll see resistance. Best case scenario, it'll push through. Worst case scenario, that becomes a ceiling and sends it lower. So that's XLE. Let's just run through these others really quickly and just see. So XOP actually made a new low on December 22nd. So that's important to know about. I'm going to just call out ones that are sort of diverging. So it was not able to hold its low on December 9th. What about Exxon? Yep, so Exxon has held its low on December 9th. They're all in the same position, right? They need to take out this high that was already made early in the daily cycle. Phillips 66, same thing. That's a day, yeah, it's a December 9th low. OIH, I called out. This is one of the strongest. So that actually has made a new high on the daily cycle just a few days ago. So that's actually looking pretty strong. Conoco Phillips. So Conoco Phillips did not bottom. Excuse me, let me just delete this. Get rid of these candles from last video. So Conoco Phillips bottomed on December 16th. So again, these don't always bottom on exactly the same day. That's important to know, a little bit of divergence. But we are making fresh highs for this daily cycle, so that's good. 1, 2, 3, 4, 5 here on day 5. How does this bad boy look on the weekly chart, actually? And let's see, what kind of dividend does this thing pay? 1.8% dividend. Weekly chart, we are making fresh highs on the weekly as well. So in this case, again, these are all looking like they could have made a weekly cycle low. So this thing had a much bigger decline than Exxon. This thing declined 21%. No reason why that can't be our weekly cycle low. We rallied about 50 something, right? Oh God, actually 75%. So this may have been the pullback everybody was waiting for in these oil and gas names. Devon Energy, this has been the weakest of the bunch. Has that changed? Not really. Low of 58.59, 58.56. So this thing made a low on December 20th. So the ones that are so most of them made a low on December 9th. Others continued to fall and needed some time to kind of catch their breath a little bit. Marathon Oil, that one made a fresh low, 26.02. Yep, it made a fresh low yesterday, actually. So we're theoretically on day 1 of the daily cycle, but notice, right, these details are so incredibly important, folks. It's just an inside day, right? A big inside day, similar to the futures, actually. Inside this range, low of 26.02, high of 27.78. So about 40 cents or somewhere thereabouts to get to the other side of this. And what does that look like on the weekly? So on the weekly chart, this is one of the few that's actually red on the weekly. So not awesome, but the week is almost over. So less of an important signal at this point. We're more kind of thinking about how does next week set up, and also how are the monthlies kind of set up. Chevron, ooh, this one looks really strong, actually. So Chevron bottomed on December 16th. It's making fresh weekly highs. That's why I said it looks strong. Let's dip over to that weekly chart. Look at that thing. Yeah, I mean, this is a very short, shallow weekly cycle low. That's also the other thing. In a bullish trend, by definition, the weekly cycle declines are going to be relatively shallow. They're not going to be these monster declines. Like, that's the whole point, right? Because if you have a monster decline, it means you give back a lot or most of the rally, which is not a bullish thing, right? So the idea that their weekly cycle declines weren't dramatic is actually a good thing. I know there's some suspicion there, but again, I think that's what stops her for, more or less, right? So that's Chevron. Oh, I don't think we did Valero, actually. Valero, how are we looking here? Oh, Valero's looking pretty good, actually. So Valero bottomed on December 9th, right, just like most of them. And what is the count today? So we made a high on day 8, and it's currently day 10. And it certainly looks to me like we are, like, I mean, unless we get a reversal against us, we are on pace to test this high at the very least. And because we're making a higher swing low. Like, these are just little higher swing lows. That's how, like, this is a little uptrend here. Very nice. What is that high? 124.32, and we're down here at 123.43. And this thing pays a little dividend too. Yeah, 3.2%. Not too shabby. And on the weekly, we haven't quite. Oh yeah, we did. We made it. We have made a new weekly high. And again, so this is week 19, 2021. Similar to Exxon, we may have had a bottom on week 21. What was the rally that we saw for the weekly cycle? From Pico bottom to top, 45%. And the decline was about 19%. So let's say we don't even have an amazing weekly cycle rally and we only rally 20%. That still takes us to 137. That could be a nice little trade. So Valero is looking nice here. Let me actually write that down. So I think that actually covers all the names here. We'll just quickly look at what UK oil is, Brent. Yeah, so again, same pattern as WTI, making fresh highs on the weekly. That's by going above, in this case, $83.14. The level for Brent that we really need to get above is $88.39. That would get us above this candle here that's marking, like, this is a big bearish red candle that, like, this is just a continuation of the downtrend, right? And so the next thing that we need to get back above is that level. I mean, it's really this cluster. I mean, you can see, and it's similar to those wicks that we have for WTI, except in this case, this is actually sloping lower. So this is a little different in terms of the chart structure. But it's basically anywhere from like 87.50 to like 88.89. Probably going to have some trouble there. So it will be important to see how price reacts up there. But it looks, at this point, looks like we're heading up there pretty solidly. Oh, actually, maybe that's a difference. Is that? No. So it's the same thing. We're making kind of fresh highs. I mean, look at that. Just beautiful uptrend, man. Just, this thing goes boom, boom, boom. So we expect something like that. Obviously, it can end at any time, which is why stops are important. And in the case of Brent, we really need to get back above 89.33, which is this swing high. Which, again, remember we talked about how, you know, we thought in real time this looked like our daily cycle low, and it could turn out that it is, right? But this little feeble 3-day rally rolled over, and now we're getting a more substantial rally. This looks more like a daily cycle advance, so that kind of makes more sense. And so we're going to really need to get back above that level to feel bullish about this more long term. But that is the update on crude oil. Again, we looked at WTI, we looked at some energy names, and we also looked at Brent. Thank you for watching, and again, happy holidays, Merry Christmas. We'll definitely try to post some updates next week, but not at the very least, I will update on Twitter if and when big things change. If you're not following on Twitter, definitely take a look at the link in the description. But thanks again for watching.